Yeah. Okay. Yeah. Good morning, everybody. Everybody mute yourself. We'll start the class. Okay. By the way, guys, from tomorrow, please try to be on time. We'll start the class exactly at 7. Okay. Also, we'll take a quick 5 minutes break in between at exactly 8 so that all of you guys can go and come back in time. Okay. Okay. So let's get started. So, good morning, everybody. This is the first session, which is going to be the intro session for audit. Now, as I had suggested in the orientation session yesterday, the first few classes are very important because they're going to hook you to the concept of audit. And unlike other topics, audit is a continuous flow. And what's important is to understand where you are in that flow in order to be able to answer the questions properly. So, what we're going to talk about today is actually a gist of something that we're going to discuss over the next, I think, around 1.5 months. Okay, so we're going to talk about. So, today we're going to talk about first, this is extremely important actually because this would tie up the entire concept of auditing. So what is auditing? What are non-audit services? Okay, so we're going to talk about a lot of engagements. And typically, this is an area that would help you understand the flow of the sessions that we are going to have over the course of next 3 months. Okay, so this is very, very important. If you understand this really well, then everything else that you're going to do is going to be like an attachment to this concept. So it's like I'm giving you a drone view today, and with time, we are going to elaborate on each of these ideas, right? So today is a drone view for audit, non-audit engagements, everything that is within this purview, and whatever we are going to do after some time, we're going to talk about government audits, we're going to talk about compliance audits, single act audits, and ERIS audits. That would be in the fag end after we've discussed all of these concepts together. Then we're going to talk about something which is called professional standards and hierarchy. Okay. Actually, today's session is a very, very interesting session. Why? Because, see, unlike in India, where we have only one stuff, right? We used to have these standard international standards on auditing, and we used to do that when we were doing audit. Now, in the US, it's very important to know what literature is available and which literature governs which kind of an engagement. So, actually, these two has to be dealt with together. Why? Because you will see, you need to know, if I'm a non-issuer. Okay, again, there's a very good concept that we're going to discuss today, which would be like a case study session or a discussion session before we will start or initiate our sessions. So this you will understand is what literature as an accountant, as an auditor, you would have to follow in order to conduct what engagement. So we are going to tie up these two topics together. And then we're going to talk about, of course, what exactly is the gas principle. So if you guys have done FAR before, so we have some basic cornerstones along the lines of which we developed GAP, right? So today we are going to speak about the exact same fundamental building blocks for coming up with generally accepted auditing standards. So this is generally accepted auditing standards. And if you guys recall, GAP is actually a very loose term that we use for the auditing, the accounting framework that you have to follow. So today we're going to talk about what exactly is GAS. When I say GAS, am I referring to a particular set of standards? Am I referring to all the standards? So what is GAS? This is something that we're going to discuss in great details after we finish the full process of audit. But today I'm going to introduce the concept of what could be the various kinds of audit report. Why? Two reasons. First, the terminologies are important. So be careful of the terms. Okay, why? Because these are the terms that we are going to use throughout the process of audit. So if you're not aware of these terms, somewhere or the other, it will impair your understanding of the current chapters that we're going to do. So this is something that we're going to elaborate. So it's like, I'm taking you to a 30,000 feet view. And I'm letting you know that these, I don't know, there's a very nice story about Sam Walton. If you read his book, Made in America. So this guy was a founder of Walmart, and he said that whenever he wanted to establish a new store, he would take his biplane over that entire area to have an understanding of where is the town and how deep is the town, how populated it is, where is the next store, and then he would decide the location where he would want to open another Walmart store. So what we are trying to do is give you a drone view at this is the entire periphery of audit. And now this is where we have to land and discuss more. So this is something that we're going to do after we finish the entire process of audit. But before that, today we're going to just give you an idea of what would be the various kinds of reports. Okay, why? Because we are going to use these terms and you need to be aware of what these terms stand for. This is important. Today, I'm going to give you a very, really big macro view of the audit process. But as time would unfold, we're going to attach more. So it's like saying I'm giving you a drone view. But as we go deeper and deeper, I'm going to elaborate that entire map. And when I elaborate that map, now this is extremely important, guys, because if you're able to understand the audit process, first, it will really help you to understand the and crack the MCQs properly. Because in audit, more than the concept, the skill that we're trying to impart is how do you crack the question, how you understand the call of the question, and how do you answer the question. And for that, it's very important. I have a huge fancy for factory floor. And so imagine any manufacturing floor where you have ever been as a part of a student. So I don't know, many of us have gone to bottling plants as a student. So think about a factory floor where the finished raw material is entering from one side and the finished goods are being exited from the other side. That's the audit process. It's where, so imagine there's a place for keeping the raw material. Then we have the process one, process two, process three, process four. And then there would be a place where you keep the finished goods. And then finally, there would be a shipping or a docking area. That entire process, before you are able to understand what question it is, you first need to understand in which part of the process you are in. Because, if you don't understand that, then you've missed the point of the question totally. So this is very, very important. I'm going to give you an extremely high level macro view today. And as we go, you've got to attach all the processes to this macro process. And in the end, now this is something which is the most feared concept in audit because people find it extremely confusing. It is, and the biggest problem with audit is, they have thrown some terms at you, but then these terms do not literally mean what it is supposed to mean. For example, they will use the term trace and vouch, and ideally these two terms have a specific meaning. But when they put those terms in the questions to you, they will use it interchangeably. So please understand that the crux and the main complexity in audit is not because of the concept. The concept is very easy. If you understand it once, it's driven home. The problem is it's a very fluid subject where the concept supersedes the terminologies. So you have to be very aware of how to approach. So what we are trying to discover over the next 36 to 40 session is how to help you crack the MCQs and the SIMs and how to reach a stage where you don't get too hooked upon on terminology. See, in reg, in FAR, we were emphasizing so much on the terminologies. If this term is there, this means this. But in audit, this is a this is a subject where we are going to take you away from terminologies and we are going to tell you, see, they use these terminologies to misguide you. You go to the concepts would supersede all the other stuff. Okay, so be very, very clear about these assertions. Now I know this might not make a lot of sense today, right now, but by the time we've wrapped up the entire session, I'm sure this would make a lot of sense. Now, before I proceed, I think I have, yeah, let me just take you through a scenario first because there's a slight difference between how auditing standards and auditing governing bodies are ruling in India vis-a-vis how it's in the US. Everybody knows about the Enron fiasco. Anybody here who's not aware of Enron? There was a firm that went bankrupt after the Enron fiasco. Can you tell me what was the name of that firm? At some point of time, we had big fives. But then there was a very big audit giant which had to, yeah, it's Arthur Anderson. I don't like that question mark in the end, Naman. Yes, Arthur Anderson was one of the big behemoths who was into these guys were into auditing, financial services. So typically anything like a Deloitte or a PwC today, right? But what happened in Enron? Like, see, in India, what happens? In India, we have ICAI, we have SEBI, and then we have these public limited companies, as we call them. And at this end of the spectrum, we have these investors, we have these lenders, right? So if you go to GAAP clearly says that whatever we are doing, so all the financial reports that needs to be prepared, the end result is that we have to protect the interest of the investors and lenders who have decided to invest in your company. So what do we have? We have an accounting body. Then we have a governing body. And we have these companies. So basically, if you look at it, there are two parties. The first party is the person who needs funds. The next party is the person who wants to invest the funds and earn a rate of return which is higher than the market rate of return. So think about your CAPM models coming in here. So you know that I want a rate of return which is higher than the return which I get by investing in risk-free areas. And because of that, I'm ready to pay a price. So higher the risk, higher the return. But between these, we understand there is a huge gap. Why? Because there is management here, but the management is separate from the ownership, right? Because the ownership is like these are companies who are owned by these scattered individuals spread across the globe, but the company is being managed by the management, and the management is uh, is having a lot of power and is in the fiduciary relationship, but we know that the management may or may not serve that purpose well. So what we do, we have these guardian angel, right? So we have this guardian. Oh, Acha Garvit, I am not aware of this. Is this true that Arthur Anderson got reframed into Accenture? I am not aware of it. And Accenture is not into auditing anymore, if I'm not wrong, right, Garvit? But I'm not too sure of this data. But if this is the true thing, then I'm not aware of it. Yeah, so consult, but forever they cannot do audit anymore. Okay, but I'm not aware of this data, by the way. So just cross check it, and others also just take it a pointer, cross check it, and let me know if that is true. So then we have this governing body. And who is this governing body? There is somebody who's saying that if I have given you a podium, so this interface is essentially the stock market, right? So we have these IPOs, which is the primary market, and then we have this secondary market, right? So what we have done, we have established an act, and that act is called the Securities Act of India. We have the IPO Act, which is a primary act, I think 1933, if I'm not wrong, or I'm not too sure, and 1934. So there were two acts which got established. And SEBI said that I am going to lay down a lot of rules for these public limited companies to adhere to if they take money from the investors. And one of those rules, like there are so many rules, but one of those rules were that they need to have their financial report submitted. And in order to do all of that, they trusted an accounting body, which in India is the ICAI. And we said that let the accounting body determine what should be the format of the report, what should be the content of the report, when should be the timing of the report, which should precede what, and besides other compliance requirements, the entire financial reporting and auditing was entrusted to the accounting body. Now, this is what still prevails in India. Is everybody in sync with this? Anybody any questions till now? If you have a question, please do not unmute, write in the chat panel. But this is exactly what is happening in India. We have ICI, who makes all the rules and regulations, and for both accounting. So this is not only accounting, they also establish standards for auditing, right? So they will establish standards for accounting, they will establish standards for auditing, and then we are going to follow that. And there are penalties if you don't do that. Now, the same thing used to happen in the US. But then Enron happened, where everything was happening the way it should have happened. So, what was happening? There was management was separate from the investors, Enron filed its returns, and everything was happening well. Why? Because the standard said that the financial accounts have to be audited because the reports are the result of what management is doing. And when the audit happens, then there's a credibility because there's a third's eye view. So we said that auditing of these financials are important. There was a third's eye view, but after following all of this, also Enron happened, and there are a lot of investors who lost a lot of money. So accounting profession in the US was questioned, and the body there. So we are just trying to replicate this model to what happens in the US. So in the US, this body is called the SEC, the Securities and Exchange Commission. This body is called the AICPA, the American Institute of Certified Public Accountants. The public limited companies are termed as issuers, and investors would remain as it is. But after doing all of that, one of these companies called Enron, who has been audited by an independent third party auditor called Arthur Andersen, even after following everything as per the standards, the company failed. And SEC was held responsible for not safeguarding the interest of the investors. And then what happened? Like, unlike in India, where we still have PwC existing in some other form, but PwC existed, nothing has happened even after the Satyam case. US took it very seriously. What they did was they said, we don't trust the accounting body to take care of the money of the investors, period. So what they did, they said, you keep doing this. I'm okay with this when it comes to non-issuers. So they said, when it comes to non-issuers, we really don't care. You guys can keep doing what you were doing because the investors' interests are not going to be jeopardized. But the moment it comes to issuers, now I don't trust the accounting profession. So what they did, they established another body directly under SEBI. And the name of the body was Public Company Accounting Oversight Board. For all the public companies which are registered in the US, there is a separate body that was set up, and that body would be now framing the auditing laws for the firms which would go to public, which would go for the audit of public limited companies. Also, there was a very important act that was passed at that time. How many people remember the name of that act? A very big act was formed in the US, and subsequently it got adopted throughout the world. Very good. The SOX, the Sarbanes-Oxley Act. So there was a body that was set up by SEC to take care of, what is it that is further needed to protect the interest of the investors. And there was an act which was passed, which is called the Sarbanes-Oxley Act. And what they did was this. So first, what they did, they had two, three major things that came into picture. The first thing was they said, I don't trust the accounting profession. For investors, we would want for issuers, not only is that I'll give you a separate set of standards, also people like Arthur Andersen now no longer have to go to AICPA. I will determine the auditing profession, and the firms who want to audit public limited companies in the US called issuers, they will have to register with us. So we become the direct authority. All the firms who want to go and audit the issuers, they will have to get routed through us. So we will give them the approval, we will manage them, we will conduct surprise reviews, we will conduct, and we'll lay down a lot of processes in the way. So that is the first thing. Second, they understood that there is a possibility that the management and the auditing firm may collude together to cheat the investors. Why? Because management is inherently getting benefited if the results are not being shown the way it is. Because, see, when things are rosy, everybody is happy. But when things tank, that is the time when people start lying, cheating, stealing. So they said, okay, I know management has direct interest. Why not create a separate body? And this body, they called it as audit committee. Okay, so what they said was, I no longer want the auditors to directly liaise with the executive board. I want a body in between. That body will be termed as an audit committee. And every time where the auditors would be appointed, it would be to the audit by the audit committee. The appointment, the removal, the main body of governance which will handle the auditors would no longer be management. Also, we made it mandatory that in audit committee, none of the members would be on the executive board. So these would be independent directors. And one of these directors has to be a financial and auditing expert. So one of them has to have had a formal experience in auditing and accounting and finance, and there has to be 3 independent directors. So what we did, we cut the direct licensing between the management and the auditors. And actually, the moment you hear about audit committee, always remember there's a term, and this is a term that we'll keep using throughout. It's called those charged with governance. TCWG. We're going to use it throughout throughout the entire course of the place. So we have those charged with governance. The moment you hear the term those charged with governance, understand that it's not the executive board. It is the independent set of people who are independent directors, and by the definition of independent directors, they cannot draw any money from the company except for the sitting fees for attending the board meetings. There were a lot of other things that we introduced. We introduced peer reviews, we introduced the signing partner rotation, because we understood that there's a possibility that the credibility function that the auditors bring to the table can be jeopardized if we do not introduce checks which has to be mandatorily followed. Hence, SOX, Peekaboo, so Public Company Accounting Oversight Board, and the entire concept of AICPA versus PCAOB becomes extremely important. And with this, what I want you to understand is the delta between how things are handled in India. In India also, there's a lot of hue and cry about creating another body similar to Public Company Accounting Oversight Board, but we've still been able to push that under the carpet. In the US, it's very important that you understand the full thing, because as SOX becomes important, the Public Company Accounting Oversight Board becomes important, audit committee. So 3 terms, and you should be able to understand the 3 terms. With this in the background, let's start today's session. So is this okay, everybody? Anybody, any questions? Is NF okay? I am not too aware of NFRA. And Aman, what is an NFRA? Can you tell me? Unmute yourself.
Ma'am, it's the National Financial Reporting Authority,
Okay.
constituted in 2018.
But I don't think that they have the authoritative status that the Public Company Accounting Oversight Board has. Because is it a compulsion that an audit firm has to register with the NFRA before they could go and audit the companies? It may be recommendatory in nature. I'm not too sure. I'll have to check this and but still now,
Okay.
it may be on the recommendatory stage. I really don't know what is the authoritative power. So can you also Google it for us and then let us know,
Yes.
discuss this in the next session? Okay?
Yep. Yep.
Yeah. Yeah. So Garvit, unmute yourself. Here's a question. What is the difference between board of directors and those charged with governance? See, board of directors, Garvit, is the executive board. Are you able to understand? So if I have, let's
Yes,
say,
ma'am.
if I have Vaisi Deveshwar, who at one point of time was at the board of ITC. So he is drawing his ESOPs from the company, right? His bonus is directly related to the performance of the company. Are you able to understand what I'm saying? So
Yes, ma'am.
tomorrow, if ITC is performing badly, he would have more incentive to cheat, lie, steal in order to not show the correct picture, right? Because if the company share prices go up, he is also benefiting because he's having more bonus and he's getting more money from the company, right? So board of directors are the people who directly uh, handle. But see, again, you would see that some people of the board of directors would be independent and some of them would be dependent, right? So it depends, but as far as the audit is concerned, you would be more careful of the term those charged with governance. So those charged with governance have to be independent. Is that clear? The keyword, the delta should be independent. So board of directors, I think, will have independent and dependent directors. But those charged with governance, when I use that term would definitely relate to only the independent directors. Is that okay?
Yes, ma'am. Got it. Thank you, ma'am.
Yeah, you're welcome. So in your mind, you have to know that if it is those charged with governance, these are the people who will not benefit if the company is lying, cheating, stealing to its investors or its lenders, because they don't get any money from the company. Okay. So with that, let's start the first thing, which is what are the various kinds of engagement. Now, this is extremely important, guys, because later on, when we are expanding after the audit process. Now, so this is like a drone's view of what could be the various kind of assignments that a professional can be engaged in after completing the CPA. So the first kind of engagements are engagements which, so remember that there was a shift, right? Initially, it was AICPA introducing its set of standards applicable for all the companies. And then PCAOB came into picture and they said, keep the non-issuers as it is, but for issuers, we'll have another set of standards. So it's not just the governing body, they have another set of full standards which would be governing the audit process of the issuers. We call them PCAOB auditing standards. So the first is that SAS or PCAOB, either of the two. So this is typically what we are referring to as audit. So when you do audit of non-issuers, we are going to say that you have to follow something called statements on auditing standards, issued by whom? Issued by the AICPA, typically relevant in the earlier era, which earlier was applicable for everybody. Now it is mandatory only for the non-issuers, because we have the Public Company Accounting Oversight Board accounting standards that would be taking care of the issuers. Now, you will see that there is something called AUC. Okay, so before the 2024 change that happened in the CPA exam, there was a time when they used to give you a scenario and they would say, now tell us what exactly, where would you find this? Where would you find this provision? So we used to call them research questions. They'll give you a scenario and you have to write the exact section, subsection of a particular standard. Now, this standard, which was the auditing standards, all of the standards in the US were rewritten once the SOX happened. And now we call them clarified standards. That is the reason why there's a C, which is suffixed to all the standards. So it's clarified. So basically, they took an overhaul exercise and they clarified most of the earlier standards and they rewrote the new set of standards called clarified standards. As far as you are concerned, nowadays they don't give you research questions. But what they will give you now may be that they'll give you an extract of an AOC. So they'll give you the law, they'll give you the situation, and then they will ask you, now tell us what we have to be doing. So when you look at AUC, we are definitely referring to auditing standards which are clarified, that means which has been rewritten, applicable for non-issuers, issued by AICPA. That means the erstwhile scenario. So this is all about audit. But then there are engagements which may not be exactly audit. What are these engagements? See, the way you have to refer to what is SARS and what is attestation engagement. So remember, there's something called SARS, which is Statements on Standards for Accounting and Review Services. And the term that you use here, so this is very, very important. In the question, if you see accountant versus if you see a CPA, an accountant may not be independent. That means if you're an accountant, you can be on the side of the management and do certain work. But the moment you're a CPA, the terminology assumes independence because it means you're giving an attest function to whatever work you're doing. So remember, the difference between the two of them is independence, which means attestation services can be done if you're independent, cannot be done if you are on the side of the management. So whatever engagements are covered under SARS, which is Statement on Standards for Accounting and Review Services, these are the engagements where the accountant, the moment you hear the word accountant, you should know that you may be on the part of the management. So what you're doing is non-audit. That means no attestation. Financial services, quote unquote, of a non-issuer. So if you're helping somebody draft their accounts, if you're doing bookkeeping with a report, if you're doing a review, but not a review of the full financial statement. See, so there are various engagements that can be done which are not audit and which may be done by a person who may not be independent. What are these engagements? Now we're going to elaborate a lot on this when we go later after we've completed the audit process. But these terminologies are important. You can prepare somebody's report without issuing any. So I can, let's say I have a startup, right? And I really don't know how to handle the accounts. So what I do, I ask my nephew, you are studying CPA, why don't you just come and make my accounts? Now this guy knows QuickBooks, Zoho, whatever. This guy comes every month, he makes some entries, and in the end, he just, from my system, he takes out the financial statements. Is he giving me any report? The answer is no. He is helping me prepare my accounts. So that's called preparation. Sometimes, let's say I'm doing all of this on my own. So I'm a good enough person to handle stuff on my own. So what I do everything on my own. I take out my reports. But then when I go to bank says, I want a compilation report. I don't need an assurance, but I need some authentic person who's engaged in this because I really don't trust what you're doing. So what do? I go and approach a body of accountants and I say, can you just give me a report? Because this guy wants a name of somebody who's professional. So that's called compilation. But in both these cases, remember, you are on the side of management. You are working for the management. You're helping them prepare their accounts or you're helping them prepare and issue a compilation report. So when you do preparation plus a report, it becomes compilation. But please remember, there's no assurance. There is no opinion. There is no attestation. And in the end, if let's say I'm talking to a non-issuer, it's a startup, and they say, see, I don't want you to do a full audit for me, but I simply want you to review a particular process. That's called a review. And generally, these are reviews which are not related to, these quarterly reviews. So see, there are three things. Remember, there's preparation, which is the lowest form of service. There's compilation, which is preparation plus a report, but no assurance. And if there is no audit, remember, this is review when there is no audit. A company who has never undergone an audit, a small company. See, all of these are for smaller companies. That is a term we use the word non-issuers. These are companies who are not big enough to go to the board, to the IPO market to raise funds. So smaller companies which are not into audit, but they want the accountant to do certain work for them. In all of these, do you think in any of these engagements you need to be independent? Yes, no? In any of these engagements, do you think you need to be independent? Preparation, compilation, or review? Any of these engagements? But Naman, okay. Jasmine, unmute. Why do you think in review there has to be an independence?
Because there is assurance in it.
So the moment you are giving somebody a word that I have seen his accounts, I have not gone in depth, but it does seem as if his accounts are correct. You can't do that if, let's say, my husband and me, we are doing some other business, my husband has a startup. I can't give an assurance for his report. Why? Because I'm related to him and there are chances that I may not be honest in my opinion. Whenever there is an assurance of any kind, you need to be independent. That's the cardinal rule. Because if you're not independent, then there cannot be any insurance, any assurance. Okay? So independence is required whenever you're going to give any kind of an attest engagement. Attestation means any kind of an assurance. Maybe some kind of a feeler that I have seen something and it looks okay. And somebody is relying on it to take a decision. So preparation, compilation. So preparation, nothing is given to anybody. So we don't have to bother. Compilation, you're giving a report with your name attached. So I can compile the books of my husband, but for anybody who's using the report, I have to disclose to them. See, I compiled, but he's my husband. So that these guys can decide how to make use of that report. For review, I cannot do a review of my husband's report. Why? Because we are related and we seem to be one unit. So you cannot come and attest the work of another person who's closely related to you. Remember, all of these assignments are of companies who are not undergoing audit. So the moment if I am an accountant and if I'm taking somebody's preparation or compilation, the format of the report, the requisites of these, the acceptance, all of these would be directed by a set of standards which are called SARS, Statements on Standards for Accounting and Review Services. Now I go to the third set of standards. So first set is audit. Audit for issuer, non-issuer. Non-issuer, remember, was the earlier thing. AICPA does it. We call it SAS. Issuers, it's now the Public Company Accounting Oversight Board, and we call them PCAOB auditing standards. We are a small company. We are not getting accounts audited. There can be preparation, no report, compilation, some report, may be related, but if I'm related, I need to disclose it in my report. Review of a company which has never been audited, but I'm doing some kind of an assurance, I need to be independent. The third set of standards are standards which governs when the engagement covers the subject matter is something which is not historical financial statements. So when a CPA, the moment you hear the term CPA, always understand that you need to differentiate between the two. The moment you hear the term CPA, you should know that there's some kind of an attest function that we are doing. Okay? SAS is not to be followed by issuers, Rashi. SAS is only for non-issuers. Just wait for the next slide. I think that concept will get clearer. SAS is a term that we use only for non-issuers nowadays. It is not the term that we use for issuers. Okay? Attestation engagement, on the other hand, the word attest means you have to be independent, right? So when a CPA provides assurance, that means some kind of a third-party credible function about written representations or subject matter other than historical financial statements. So I'm giving you an opinion, and that opinion is on a subject matter which is not your financial statements, which is not P&L, which is not balance sheet, okay? Then that service is called an attestation engagement. Again, there are various categories. There could be an examination. I can examine. So you have told me that there is an engagement, and that engagement I have to follow a particular process and then come up with a report. That report should say that, yes, I've seen everything and nothing has come to my knowledge that made me to believe that your financials are not according to the function. Now, review and examination, there's a difference. Review is that nothing has come to our knowledge to make us believe that what you're doing is not correct. That is called negative assurance. So the term that we use here is negative. Sometimes we also use the term limited. So what I'll do a bird's eye view. I will check your ratio analysis and this and that, and I'll come up and say, see, I did not go in deep, but whatever I've done a sanity check, and it does seem as if everything looks not to be misplaced. So we are trying to have a negative connotation to a report, and we've safeguarded ourselves as saying, see, I did not dig very deep. I simply did a bird's eye view with some kind of a review. And wherever I found that there's a discrepancy, I investigated that. And when I investigated, I did not find anything that would make me to believe that you're not following what you should have followed. That's a review. Examination is when I come up and say, I have dug deep. I did dig deep, and I have come to a conclusion that your accounts are not materially misstated according to the criteria that is laid down. So actually, examination is very similar to audit. It's just that the scope is really narrow compared to full set of financial statements. But even there, what you give is something which is called positive assurance. So even in audit, what you give is a positive assurance. We give an opinion. We cannot dilly-dally and say, I think nothing is wrong. I'll have to say yes. So in audit, what do we say? We say, I have done the work according to SAS or PCAOB standards. What work have I done? My work is to see that gap that you had to follow has been followed. And with the work that I've done, I can be reasonably assured that your accounts are following gap. So I have to bell that cat and say, I've done some work, and it's not 100% assurance, but I'm giving you a reasonable assurance because I'm not checking 100% of your work. But the most important ones on a sample basis I'm checking, and I'm giving you an assurance that things does seem to be in order what it should have been. Only if the subject matter is reduced to something which is not historical financial statements, then that engagement is called examination, and the kind of assurance is as big as you have in audit. Now, after this, if there is a review, okay, after this, yeah. So historical, the word is Rashri has a question. She's saying why we are saying so. Historical is the word which connotes your financials as per GAAP, like balance sheet, P&L, statement of changes in owner's equity, cash flow notes. So if we are not talking about those, and if you're okay, Rashri, can you unmute yourself? See, whenever you want to pay bank loan,
Yes, ma'am.
I think there are multiple logins at your end, so my voice is echoing. So I am muting you and I'm taking this question. See, whenever I take a bank loan, I still have to give a prospective financial statements or a plan and then get an approval from the bank, right? Now, for those engagements, can I ask the auditor to get this done? The answer is yes. But when I do that, it's not historical financial statements. So we are not talking about the set of statements that everybody is aware of. It is something other than historical financial statements. So that's the reason we've made it very, very clear in the standard that if it is historical financial statements, go and address the auditing standards, which is SAS or PCAOB. But the moment it is anything apart from historical financial statements and you need an auditor to attest it, then it is examination or review, or there's something also called an agreed upon procedure. What is an agreed upon procedure? You tell me do steps A, B, C, D, E and give me the result. Auditor comes, does step A, B, C, D, E and give you the result of findings. No assurance. So generally, whenever we have these cross-country repatriations and stuff, where there's a list that the client gives you, and the client takes the onus of saying that the adequacy of procedure is my headache, I simply follow those steps and I give you a report of my findings. That's called the agreed upon procedure. Yeah, Subhashi, the example that I gave you, apart from historical financial statement, can be prospective financial statements. When I'm taking a bank loan and bank wants me to submit a 5 years prospective financial statement, which has to be vetted by a CPA, that covers under attestation standards and not auditing standards. Is that clear, Subhashi? So remember, auditing, then examination, then review, then agreed upon procedure. But in all the cases, so do you have to be independent when you're doing attestation? Yes, no? What do you say? If I am engaged in the attestation engagement, do I have to be independent? The answer is yes. Being independent is a must. You have to be independent. Same here. Independence is required. In this case, you may not be independent. And that is the reason we're using the term auditor. So for preparation and compilation, independence is not required. So this is one slide, but it takes care of a lot of stuff, guys, okay? We have understood the terminologies: accountant, CPA, attestation, assurance, compilation, preparation, review, examination. All of these terms you're going to be using throughout the next topics. Before we actually, so what we are going to do, we are going to first talk about audit. Then after that, we are going to finish off with the audit report. Then we are going to go to the engagements other than audit. So we are going to go to preparation, compilation, review, examination, agreed upon procedures. Each of these standards we are going to learn. And then after we have done everything, We are going to have 1 or 2 sessions on what is ERISA requirements, what is the GAO and the single audit requirements, what's the compliance audit requirements. And then finally, we will go to ethics and we will wrap it up. No, Garvit, you are incorrect. I'll tell you. We'll go to the next slide. I think you'll be able to understand what gas refers to. There is only 2 things where independence not required preparation come up. Yes, Mitali, that is true. You're correct. Okay. So the first set of standards are termed as auditing standards. Yeah. Naman, we are going to talk about it in great details when we go to review. See, a review in SaaS. Naman, unmute yourself. A review in SaaS is of a company which has never been audited. Is this clear? You're
Yep.
not doing the audit. A review in attestation is, let's say I'm talking to a client, I am a CPA, I'm talking to a client and the client wants me to assess some of his requirements and I am not the auditor for that company. Are you understanding? So I am asked to give a certification report. You remember I gave you an example yesterday of a brand of cigarette for which we used to certify the sales? If I'm doing, so there are a lot of certification jobs that auditors get, right? So if it's related to a company in which I have not done the audit, then it will be governed by the attestation standards.
Okay.
But even if it's a non-issuer and the non-issuer, I'm doing the annual audit and the non-issuer wants me to do the quarterlies, then that engagement is a review, right? When I give you a quarterly statement, it's a review, but that will be governed by SAs. And if let's say I am doing the audit of a public company in the US, like an issuer, then I'm doing I'm following PCAOB standards. Then even the interims would be followed under the PCAOB standards. Have you understood the delta?
Yeah. Yeah.
So if I'm doing the annual audit, and then as a part of that audit, I'm also engaged to do the reviews. I will follow the mother standard that I had followed when I've done the audit. But if I'm doing a review of a company which has never, which is a non-issuer, right, for which the audits are not conducted, then it will be SARS. And if I'm doing the review of a company which is engaging me to do an ad hoc review, not a examination. So you can understand the review is less than examination, right? Then that's attestation.
Okay.
Is that clear? This is a little confusing. We are going to elaborate more on it when we go to review, but this is the crux of what we are doing. Okay, but good question that you've even thought about. Jasmine, yes, agreed upon procedure, you need to be independent. Why? Because you are essentially giving a kind of an assurance, right? That I have done the work according to what the third eye view that you wanted me, and I've given you a report of findings. So you cannot be the same party as the management. Jasmine, is that clear?
Yes, Shradha.
Okay, now see, so that was the idea about what different kind of engagements could have been there. Now let us go to which standard would cover which engagement. So when I talk about auditing standards, whether I'm going to issuers or whether I'm going to non-issuers, first of all, understand that if I am doing the audit of any company, I have to compulsorily follow a set of standards. If I'm doing it for a non-issuer, as I already told you, this was thing that was existing before the Sarbanes-Oxley, pre-Enron era. So these are non-publicly traded companies, typically termed as non-issuers in the US. And these standards are still governed by the Accounting Standards Board, which is a part of US CPA. And they have come up with a set of standard, which is called the Statement on Auditing Standards. Now they've been clarified. That means they've been rewritten and now they have been put into a more comprehensive, easily readable format. Hence, they are suffixed by AUC. Now, ideally, guys, when we say gas, actually, this is what used to be referred to as gas, right? Every company used to have their accounting profession, and this accounting profession came up with a set of auditing standards. Hence, this is traditionally what was termed as gas. But then the Enron fiasco happened and the accounting profession lost its credibility in the eyes of SEC. So they came up with a separate board and they called it Public Company Accounting Oversight Board. And they made it mandatory for any firm who needs to be auditing the issuers to first get registered with PCAOB, and then all the standards applicable for audit for these issuers would be governed by the PCAOB with a separate set of standards called PCAOB auditing standards. Now, Garvit had a question here. It was a good question. When I say gas, what is it? Is it PCAOB plus SAS? Now, traditionally, you may say it like that, because when I say gas, just like there is nothing called gap, right? We don't have gap 1, gap 2, gap 3, right? We have Ind AS 1, Ind AS 2, Ind AS 3, but there is nothing called gap 1, gap 2, gap 3, right? Similarly, there's nothing called gas 1, gas 2, gas 3. Gas is a loose term which originally was referring only to SAS, but now colloquially, it may also refer to PCAOB standards. So a set of standards that have to be followed in order to do the audit of companies in the US. So it's called generally accepted auditing standards. But when you see it in your report, in the financial report, in the auditing report, you will see that when it comes to non-issuers, they've used the term gas. But when it comes to issuers, they have still said that they've used the word PCAOB auditing standards. Okay, so it's a slightly loose term. If you do not see PCAOB, then choose gas for non-issuers. If you see PCAOB, so if you don't see PCAOB, then gas can refer to both. But if you see PCAOB, ideally gas is a term which we refer only for non-issuers. Okay. Then there's a separate set of standard which was introduced by the government of auditing, which is issued by the Government Accountability Office. Just like we have a separate set of standard for the government accounting, similarly, we have a separate set of standard for government auditing. Apart from that, even if there are some international standards on auditing, and if an accountant or if an auditor or a CPA has followed those for doing the audit of companies in the US, even that is acceptable. Just like even for GAAP, you can follow the IFRS framework in the US. Similarly, even for gas, like in auditing, you can follow the ISC and say that yes, you have complied by the requirements of audit in the US. So is this clear? Non-issuers, issuers, gas, PCAOB standards, and mandatory. Compulsorily, you will have to follow these standards. If you have engagements other than audit, of course, nearest to audit is attestation. We follow the attestation standards, which is SSAE. Then, depending on whether you've ever had the audit, if you're engaged with smaller companies, essentially non-issuers, and you're doing engagements which are much lower in standard than audit, like preparation, compilation, and reviews, then you'll be covered under SAS. Then there are some other guidelines called AICPA Code of Professional Conduct. We have something called quality control standards that is for the firm as a whole. This is for the firm as a whole. Okay, this is what we have to cover over the term of our entire 3 months, right? So first we will do audit, then we will do SARS and SSAE. See, statement of quality control standard we are going to do tomorrow itself, and this we are going to do in the end. So it's like saying throughout the entire firm, what is it that I have to follow? And then we will start with the audit process and with the reporting. Then we're going to go to standards other than audit like SARS and SSAE. And then we're going to talk about government audits. So there are 3 audits, right? We're going to talk about government audits. So typically these are audits for companies also who've received grants. So it's called Single Audit Act. And then there's something called compliance audit. These are not very, very important, guys, okay? Because these are questions, if at all you'll get it in the MCQ format. And in the end, we're going to talk about ERISA audit, which is audit of employee benefit plan. So all of this we're going to do in the FAG end after we've completed all the concepts. Okay? Obviously, the most authoritative position is of the standards issued by SAS. So it's SAS or PCAOB. First of all, anything written in the standards is like something which is written in the stone. You have to follow it. After that, let's say if there's something which is missing in the SAS or the PCAOB standards. Then what happens? Once the standard is issued, then there are a lot of, if there are any gaps which are there in the standard, which reference to a particular industry, then people from the industry put questions. And then there are interpretations which are issued by the governing body, which is either AICPA or PCAOB. So if something is not there in either SAS or PCAOB, then you follow the interpretive publications. And only after that, there may be some recommendatory stuff which is available for the understanding of auditors, but these are lowest in hierarchy and they have no authoritative status. So first is SAS or PCAOB, then there are interpretations, period. Okay. Now see, this forms the base of auditing. So what we're discussing today is supposed to be interpreted for everything that we're going to do in audit. So what is the job of the auditor? What am I supposed to be doing? Is it my job to prepare the financials, guys? Is it my job to ensure that the financials are prepared according to GAAP? Whose job is it, Rashri? No, Shikha, you cannot say accountant. Accountant is whose job? Let's say if the accountant makes an error. Whose job is it? Shikha, unmute.
Yes, ma'am.
If the accountant makes a mistake, who takes the brunt?
Management.
Remember, management and not those charged with governance. So here I want you to
Right.
understand the delta between management versus those charged with governance versus auditors. Is that clear? So ultimately, who has the job of ensuring that the financials are prepared according to GAAP? It is the management, the executive body. Okay? Thank you. So what is my job, guys? What is my job? So first, now forget about attestation, review, everything. Now we're just going to concentrate on audit. So if I am doing an audit, what is my job? What is management's job? That's what we're going to talk about. So whenever you look at an auditing standard, so somebody has written that we have to do sampling. Somebody has written that the audit report has to be in a particular format. So who has written it? GAS. Now we know what is GAS. It is SAS standards or PCAOB standards. So what is my job as an auditor? So management job. So that is why FAR becomes important, right? Because an auditor is going to check what the management has done. And what is the management's report card? Financial statements, right? So throughout audit, I want you to remember that the report card of management is the financial statement coming from the IT system or the accounting information system, which is deployed by the management, right? So what is happening? When the auditor walks in, he has a set of statements that are prepared by the management in accordance with the accounting framework, which is either GAAP or IFRS. My job is what, guys? What is my job as an auditor? Can anybody tell me? What is my job as an auditor? What is my job as an auditor? One word. You have only one word to give your answer. What is my job as an auditor? What is this called? Rashri? That no, very good. Garvit. My job is to give an opinion. Opinion on what? Garvit, unmute. Opinion on what?
Opinion on the financial statements prepared by the
That means
management.
what am I supposed to do? I'm supposed to tell you that I have checked your accounts according to GAS, and I can tell you with reasonable assurance that your accounts are prepared according to GAAP. Yes or no?
Yes, ma'am.
That is the reason GAAP becomes important. Thank you, Garvit. Very good. So what we're trying to say is, it is your job to prepare your financials, which is what? Which is balance sheet, P&L, your notes to accounts, cash flow, statement of changes and owner's equity. All of this, it is your job to prepare according to GAAP or IFRS. My job is to follow my set of standards, which is either SAS or it is PCAOB, and then to conduct the audit and give you an opinion on whether your financials, whether your balance sheet, P&L, cash flows, a statement of changes in owner's equity and notes are in compliance with GAAP. That is my job. So what is my job? First, perform the work. So I have to do the work and I can't do it on a gut feel. I can do it on a gut feel, but I need to substantiate with evidence. About what? About what your financials say, which is according to GAAP. So when your financial, so okay, guys, can you understand one thing? That the report card of management is a financial statement. And there are some innate assumptions and assertions which the management is trying to make through the financials. For example, I am saying that I have completeness. I am saying that my accounts exist. I'm saying that my transactions have occurred. So this is something which you're not speaking, which is implied in your financial statements. When I am giving you my set of P&L, I am trying to tell you that I have taken all the sales that I should have taken. Whatever sales I have taken actually has happened in my company. All the assets that you see are properly accounted for. So all of these are those stuff that I don't write, but it is implied when you give me your report card. My job is to see your report card and then evaluate whether all of those unspoken promises that you've made via your report card is actually true or not. So what is my job? My job is to get the work done. What is my work? My job is to get the evidence. I will do something objectively substantiate whether your report card, guys, just unmute your, just mute yourself, okay? Let not there be any background noise. Garvit, unmute yourself. My job is to see your report card and all of those unspoken promises that you're making impliedly via the report card, saying that your accounts are complete, everything that you're showing there exists, transactions have occurred. All of these assertions that you are impliedly making via a report card, I gather evidence and then I form an opinion and then I communicate that result to a set of financial statement use. So I am not doing it for the management. My report is meant for the external users, your primary users. So this is somewhere where GAAP and GAS has to marry, right? Because what auditors do is like an attestation for what GAAP is supposed to be doing. And that is why FAR becomes very important in audit. Okay, so who are my primary users? My primary users are investors and lenders, people who've decided to part with their money and put it in the company. So when I'm looking at gas, I need to know what is my job as an auditor? Why am I doing what am I doing? Then I need to know when I'm doing that work, what is the primary responsibility that I have? I have to be independent. I need to have professional skepticism. You know, when I was giving my audit paper way back, I think in the year 2000, 2001, when I was doing my graduation, there was a sentence that we used to use n number of times in the audit papers. Auditor is a watchdog, not a bloodhound. Have you heard of this statement? Anybody here? That one statement I'm sure has everybody must have written in their auditing papers wherever you have written audit papers in India, right? What if you're trying to say is, as an auditor, you cannot go and say yes, yes, yes to the management all the time. You have to go with the feeling that something is wrong. You know, you have to be like a Sherlock Holmes. I'm not saying go and prove to the others that you are wrong. Don't go like, don't become a fanatic. But go with that feeler that there may be something which is innately wrong. Okay. And you will be surprised to know that we try to tell you, we try to coax you, please go this. Who are we? We are SEBI, right? We are SEC. We're trying to tell you, go and figure out if there's something wrong, something wrong. And then we realize that you guys are not listening. Who are you guys? You guys are auditors. Then we made it compulsory to you. We said, in every audit, assume that revenue recognition is a problem. Go with the feeling that revenue recognition is wrong, because there's a whole body of research which says that whenever companies' accounts are fudged, sales is the first figure which is incorrectly stated. So what now we are telling you is, I'm telling you, please approach your audit assuming that sales is not correct. And then it's your job to tell me, why do you think sales is correct? So rather than saying there may be something wrong or there may be something right, I'm saying assume that sales is wrong. And now give me a report saying why do you think that the client sales figure is correct? So there are two, so we call it presumptive fraud risk areas. Okay, these are terms that we're going to learn more about when we go to risk. But we say that assume that there is a presumptive fraud risk area. So there are two presumptive fraud risk areas. I've told you the first one. Can anybody tell me the second presumptive fraud risk area? Anybody? Jasmine? Which is the second presumptive fraud risk area? No. The first, so this is the auditor's responsibility that I have fixed. I want you to have a skeptical mind. We call it professional skepticism. So that's the first term. So first term that we have to use for responsibility is professional skepticism. So always feel that there's something which is wrong. Hindi mein there's a term called dal mein kuch kala hai, right? Always believe that what is being shown to you is not correct. And I kept on telling this to you like like nudging you, but now I've made it mandatory for you. When you go for an audit, believe that there is a presumptive fraud risk area of what? The first area is revenue recognition. So assume that revenue recognition is wrong, and then tell me how you are going to approach it. And second is something called management override of controls. When I say internal control, what comes to your mind, guys? Why do you think internal control is so important? Like in audit, why are we saying control, control, control all the time? Can anybody tell me? I can simply concentrate on financials and I can give you my opinion. Why are we referring to internal control? Why are we even referring to controls of any sort? Can anybody tell me? Why do you think in auditing, internal controls are as important as financials? What do you mean by internal control? If I just, drop that term to you right now, what does that term mean to you? And why do you think as auditors, it becomes our job to even go through the internal control? Can anybody tell me? Ankita, I would want you to go a little bit deeper than what you're saying. Is this the answer to your current question? Financial risk? I want, Ankita, mute yourself. What do you mean by operational?
No.
Yeah.
So, like day in, day out management of the business that is at risk. So the finances might be good, but if there be one single event, and that would be a huge loss to the company.
So do you think as
So
an
do you
auditor,
think as an auditor,
hey, why is my
why is
word
my
echoing?
word echoing?
1 second. I'm
One
exploring.
second.
Okay, I think you guys have logged in either at two places because my voice is echo. I don't know how is it happening. But Ankita, think about what you just said. Does it mean, imagine if I am going and doing the audit of HUL, whatever these guys have done throughout the year, do you think I should address my audit procedures to figure out that one incident that could be so big that, that they would try to cover under the wrap? Do you think that should be the aim of my audit? See, please understand one thing. Just like Warren Buffett does not want to figure out what the companies are, he just wants to see their report card, and through the report card, he wants to assess the performance of the company. What we are doing as auditors is we are looking at your report card, and then we are looking at what GAAP wants you to do, and we are telling you, yes, what you are doing is as per what GAAP wants you to do. And whom we are saying, we're not saying this to you, we are saying this to all the people who gave money to you. Then why are internal controls? It cannot be for those one-off events, okay? Please remember that. Why I want to ensure the integrity of management, Jasmine? No. Why do I ensure? See, okay. Now there are two things. Jasmine, unmute. Let
Yeah.
me see my word echo with you. Okay, no, nothing. So tell me something. Internal control is a very big term, right? So let's say if
Yeah.
I go to a hotel industry, if I look at their internal auditors profile, no, you will see that these auditors will have to come up and say whether the dustbin is being cleared on time, whether the white sheets are white to the level of 9 and not 5. Even that becomes a part of their audit purview. Are you aware of this?
Yeah. Yeah.
Internal audit can have lots of stuff. But am I supposed as an auditor to look at all the stuff?
No.
Why? And what is it that becomes my filter?
I mean, you cannot look at everything. You need to look at high level things, and that's why sampling and population is done.
No, that's not the correct thing. See, the internal control has a much wider scope than the financials, right? I am not
Yeah.
interested in knowing whether you're running your company properly or not. I'm not interested in knowing that. I'm interested in knowing whether your financials are as per GAAP or not. Are you clear?
Yeah.
So I am not interested in knowing whether you should have funded that project. I am nobody. It is investor's job and the management's job. But it is my job to say if you have funded that project and if the report of that is included in your financials, then the financials, are they disclosing the losses properly? Yes or no? Is that correct or not, Jasmine? So
Yeah.
first of
Yeah.
all, forget about internal control. There's a term that we use which is called internal control over financial reporting. I am not interested in the company as a whole. I'm interested in the company's performance only as it relates to the financial reports. Is that clear?
Yeah.
Okay, so I think Ankita, this lets you understand where you're making the error, right? Now tell me, why is it that internal control is important? Yeah, so this is somebody who said this, internal control over financial reporting. Somebody said this. Who is this person? Let me once see. 1 second. Yeah, Subhashi said this, right? Very, very good, Subhashi. Then why are we looking at internal control? I still haven't got that answer, guys. Why? Why do you think internal control is important? Why? I am looking at the reports. Okay, I'll give you another example. I go to a local kinara, my local in say I am from Bengal. So there's a term that we use which is called Mored Dukan, Para Dukan that we say, right? So we just go to the end of the road and we have a local vendor and he supplies goods to us. Do you think he has any internal control? This guy will give you a handwritten bill at the end of the month and you will see every time that this bill will be 100% accurate. Your local dhobi who comes to your place or a guy who comes for ironing your clothes. He takes your clothes, he gives you back your clothes, and then at the end of the month, he gives you how many clothes were taken and you pay him. Do you think this guy has any internal control? Yes, no. I need an answer, guys. Any internal control? Do you think he has SAP, GAP, any kind of... So, if let's say if a place has no internal control, does it mean that the financial accounts are all wrong? What do you say? So that is exactly what I'm referring to, Rashri. Just because my general store Dadu has no internal control, will I say that his financial accounts are incorrect? Yes, no. Rashri, unmute. Just because my local vendor has no internal control, will I give a qualified results? Your results are wrong. Yes, no. What do you guys think? Are you able to understand where am I trying to get at? Please understand the only reason why internal control is important to us is because the financials are a end result of the internal control process. Now, nobody is actually manually making any JEs, manually making any ledger, trial balance, financials. It is all coming from the system. So we have to know whether that system is working properly or not. So if there is a purchases as a module, and if we have written that there must be 3 codes for purchases, and then there must be somebody who's very fine and giving you the credit limits, if there must be something where we say is that, when we are purchasing, there has to be a sync of what we have ordered versus what we have received versus what we have paid for. All of this is the client's system, client's internal control. But this is important. We cannot ignore this. Why? Because your financials are coming out of this system. Nobody is making discrete entries. It's the end result of a system. So you will have to assess whether that system is working properly or not. If that system is not working properly, or if that system does not exist, it does not automatically refer to your financials being incorrect. It simply means that I'll have to increase my sampling much, much more in order to come up with a conclusion on your accounting, on your financials. So please remember, accounting, like my opinion on financials and internal control, cannot be segregated. Why? Because once I understand the internal control, ideally the financials are a result of the internal control process. Hence, internal control also becomes my baby when I'm doing the auditing job, but not everything. The company may have lots of internal control. See, if I'm an internal auditor, I remember going to a factory and I remember looking at the environmental laws to see how they're disposing of their used oil. But that is not a purview of financial auditors. Financial auditors will come into picture when they say, okay, if you are not disposing of your oil the way you should have, then you have to provide for those losses. And whether have you provided for those losses or not? So please understand, first, forget about internal control totally. We are only interested in the internal control over the financial reporting process. Why? Because your financials are the end result of this process. Even if the client has no internal control, it does not mean that your financials are wrong. It simply means that I'll have to do much more work to come up with an opinion stating whether your financials are correct or whether your financials are incorrect. So we are talking about a lot of stuff here, guys, and I don't want you to feel lost, but it's important that you connect everything to a base, and we're trying to develop that base for you. So we have a set of standards which clearly says why the audit is being done, which clearly says what is your job as an auditor before you do the work. What is your responsibility? So always be skeptical of the client's data. Always assume that the client would have overwritten the controls. Why? Because you cannot just look at the control process and say, oh, controls are happening fantastically. I have to do less work and hence I'll give my audit opinion directly. Yes, there are controls, but also feel that these controls are always in somebody's hands. And these somebody, if somebody is sitting on the chair, always has the power to override those controls. So yes, there are controls, but don't set a blinder saying ki control hai, forget. No. Yes, there are controls, but as an auditor, keep in your mind, controls can always be overridden. So be aware of that fact. Consider that even when you're devising your audit process. Then there's a set of standard which is termed as performance standard. Okay. What is performance? What you should be doing. How should you be documenting your work? In fact, if you go to SOX, and this is what happened with Arthur Andersen when they were caught. You know what these guys did? They deleted all their audit files. They tried to tamper with the audit trail. And after that, it was fixed as a criminal penalty, right? We laid down laws, and not only laid down laws, like, there's something called working paper files of auditors. Now there has to be a formal day when you say, I'm closing the audit and closing the working paper file. You have to keep a log every time that file has been touched, who has touched it and what has been done with that file. We have given you a tenure of 7 years for which all the reports have to be kept and all the working papers have to be kept. So all of these data is given in SOX. In GAS, we are clearly saying how you have to do your work. So sampling can be done. The documenting, all of these requirements are laid down in the performance standards. And of course, in the end, we have something called reporting standards. How would you be issuing your audit report? Please remember, guys, audit report is very, very important. Every word, every letter in that audit report. And, I have seen scenarios where in the end, an audit report was about to be issued. Client is skeptical of even a comma that you put in the audit report. People generally don't want to tamper with audit report at all. It is as per the exact format given by the standard. And if you are qualifying that report, if you're adding anything in that report, it's a huge deal for both the parties. So reporting becomes very important. 4 things. What is the purpose of audit? How should I be doing my audit? What should I be doing in that audit? And how should I be communicating as my final report? So all of these 4 becomes important. So what is my job as an auditor? My job is to give you an opinion. Opinion on what? Whether your financials are presented fairly, Please remember, I cannot give you 100% assurance because I'm not going to check whatever you've done 100%. Okay? Yeah, exactly. Vidali, you are correct. Right? So what is my job? My job is to give you an opinion. Opinion on what? Whether your financials. When I say your financials, it means I'm looking at P&L, balance sheet, cash flow statement, statement of changes in equity, and notes. Whether your financials are presented fairly in all material respects. Remember, there's nothing called no absolute guarantee. Please remember, we are not going to check 100% of all the entries made in your books. No, we are going to test check, right? That's called sampling. So I'm going to do a materiality check and let you know that in all material respects, I have followed a set of standard, which is gas. And according to doing, I did my audit according to gas. And now I'm giving you an opinion that your financials are prepared according to the financial reporting framework, which is GAP in most cases. So I am telling you, and who is this you? You are external users, investors, lenders. Let's see, I have gone and checked the report card of what the management has given. They were supposed to follow GAP. I looked at their financials. I looked at their controls, out of which the financials came out. And I am of the opinion that their financials are presented fairly in accordance with GAP in all material respects. Can I deviate from GAP? The answer is yes, in extremely rare circumstances. So I think it is mainly for theory. Typically, nobody wants to deviate from GAP, but still you have to understand theoretically what we want is a fair presentation of the transactions and events underlying. So in extremely rare circumstances, when you feel that following GAP will make the accounts misleading, you may differ from GAP and you have to substantiate. So that is a possibility if you feel that if you depart, you will have a fairer picture of the financial statement. But this is a totally theoretical concept, guys. I have never seen a scenario where a company would come up and say, okay, I'm not following GAP, but this is better for me. Maybe, think about a scenario when suddenly things are changing. I was reading a report the other day. Some company in the US have bought helium supply on moon. And now they are going to bring that kind of helium called helium-3 from moon in for the industries in India. I mean, we're talking about a scenario that maybe the gap setters have never thought about. For that, if the reporting is different, for a long time, we used to say that Tesla came up with a set of financials which are completely different than any other. So if you look at least, we came up and we changed the standards because we saw that the industry is changing. So in extremely rare circumstances, when the industry changes and gap is still not caught up with the change in the industry, maybe a departure from gap may be warranted, but that's an extremely rare scenario. And then, of course, it's either gas or ISAs. So what is my job? My job is not to prepare your financials. My job is not to check your internal controls. My job is to check your internal control over financial reporting, come up with an opinion. Why? Because I want to let the users know that their financials were prepared according to GAAP. And when I do my work, I do it as far as gas. Now, can you see here this gas is used? Garvit, unmute. This gas here is peekaboo, PCAOB and SAS or only SAS? What do you say? Garvit?
I think it's SAS.
No, but also PCAOB here, isn't it?
Okay, okay. Okay, for reporting it is different. Okay,
Yes
okay.
or no? It's not different. In this case, when they're referring to gas, actually they're referring to the auditing standards, which will be both for issuer and non-issuer, isn't it?
Yes, ma'am.
Have you understood? Or it can be, so this is US auditing standards. That is what they are referring to as gas, right? Or if you want, you can also take international standards on auditing. Is that clear?
Got it, ma'am. So if it is while reporting, if it is gas is issued, then it's non-issue.
No. Okay, no, you've not understood it properly.
The reporting part. Okay.
In reporting, no. In case if they give you a scenario in your exam where they tell you about PCAOB and SAS, then you will say gas is only SAS because PCAOB is written as an option for you. Are you understanding?
Okay, so
Then they have narrowed it down further. But in case if they are referring to a scenario, so it is only for cracking questions. There is no difference in the concept. Have you understood?
hmm. Okay, got it, ma'am. If it is PCOB, then issuers, then if gas is written,
Generally,
then
gas is for non-issuers, but colloquially they are referring to gas as auditing standards relevant to US. Is this clear?
okay, got it,
In a
ma'am.
scenario like this, they're using gas as auditing standards relevant to US, which if for non-issuer will be termed as SAS, if for issuers will be termed as PCAOB. Okay, but when you go to the reports for non-issuers, they will clearly write it there. Auditing standards issued by AICPA. Are you clear?
Got it, ma'am.
Yeah, thank you. Just like, even for, yeah, Garvit has a question. So ICFI is a process and financial statements, Adi. And yeah, exactly, Garvit, you are correct. Yes. Wow. So what are we supposed to do? We are supposed to give a third's eye view, right? A lot of people who say that after blockchain and everything, accounting will change. Maybe if you start deploying blockchain really well and it is universally applied, maybe when you can trace the trail of everything, maybe you will not need the credibility function. But we don't know when is that going to happen, when that is going to become a norm. But yes, blockchain may create a scenario when the role of third eye function may get defeated completely. Why? Because the moment I can see the entire trail and it is matched to everybody, maybe I will not need a third eye view. But when is that time going to come? Nobody knows. Yeah, Mitali, you're correct. Okay. So first is, why am I making, what is my job? My job is to give you an opinion. Opinion following my set of standards, which may be SAS or PCAOB or international set of standards, in order to show and let you know that there is an opinion that I'm giving that your financials are prepared according to GAAP, which in extremely rare circumstances, you may not follow. And when, how should I be doing that work? See, my job is very clear. My job is not to make your accounts. My job is not to define your controls. Whose job is it? It's management's job. Management has to prepare their financials and present it in accordance with GAAP. Management has to design, implement, and maintain a set of internal control. And management has to ensure that auditor has access to everything in order to do the work. What is my job as an auditor? My job is simply to give you an opinion. That opinion is not an absolute assurance. I'm not giving you 100% guarantee. My job is to give you a reasonable assurance that financials are prepared and according to, remember, this is according to the financial reporting framework. I do my work according to auditing framework, but my work is to certify that your work is done according to the financial reporting framework. Why don't I give you an absolute assurance? See, a lot of factors. First, auditing is not pure science, nor is accounting, right? We use a lot of judgments, we use a lot of estimates. And the nature of, see, first of all, as I told you, that the job itself, that means the job of preparing the reports as per the financials. It is not pure science. People may change, the same industry may have different participants who may have different opinions on certain data. And with the change in that assumptions and biases, they do creep in the audit process, right? Think of two management, same industry. One is looking of a very rosy future, one is apprehensive of a very bleak future. The person who's apprehensive for bleak future will have a lot of provisions in his or her book. And this guy will have a reasoning for that, right? So remember that auditing and accounting, both are not pure sciences. Both of them has a role of personal judgment and biases that creeps in. Hence, nobody can give you a pure assurance on anything, right? Also, see, if I would check every single accounting entry that has been passed, maybe I will give you a much better view. But is it worth the time, effort, energy? The answer is no. So there are a lot of stuff because of which the work that I'm doing cannot give you an absolute assurance. At the max, it would be a reasonable assurance considering the materiality thresholds. Garvit, no, you're not understanding what I'm saying. Garvit, unmute yourself.
Yes, ma'am.
Okay, I now don't remember which company exactly, but I think Procter and Gamble follows IFRS. Is that okay? So, gap in the US, gap is a term that is colloquially used for accounting standards in the US. Is that clear? But if Procter and Gamble is following IFRS throughout the world, they have continued to show their reports in IFRS even in the US, and US government accepts it. Have you understood this?
Yes, ma'am.
So imagine if these guys also do the audit as far as ISA is concerned. Can you issue a report in the US saying that you have followed ISA standards? Can you do that? Garvit, yes, no? Right in the chat panel. Can you do
Yes,
that?
ma'am.
You can, right? So ideally, when you say gas, what I'm actually so it's like a mental reference. I'm actually referring to a set of standards applicable in the US. But this is may sometimes be referring to SAS, may sometimes be referring to PCAOB. Are you understanding what I'm trying to say this? When you go to reports, you will have actual mention of US gas for non-issuers only. For issuers, we've made it very clear set of standards issued by PCAOB. But colloquially and in your questions, when you refer to gas, loosely it may refer to standards applicable for auditing in the US. Is that clear? Garvit, is this clear?
Yes, ma'am. This is clear, ma'am. For reporting, I want to ask one last time that
Yeah.
that if reports are being issued, if PCAB is mentioned, then it's the issuer. If it's gas, then non-issuer.
Yeah, generally. So you have to read the report of both the parties, but you will see in non-issuers, they made it very clear. Follow gas, a set of statements. So gas there refers to SAS. But whenever they give you a report for an issuer, they will clearly write, I've done my audit according to the PCAOB standards issued by PCAOB. Is that clear? So just
Got
go through a non-issuer and issuer's report, you will understand what I'm referring
got it, ma'am. Thank you.
to. Okay? Yeah, you're welcome. Okay, one second. So what is my job? My job is to get reasonable assurance and report on the financial statements. So we have done purpose, we have done responsibility, we have done reporting. How should I do my work? I should do my work with professional skepticism. I should always assume that things may not be as rosy as it appears. So, circumstances may exist that cause the financial statements to be materially misleading. So, basically, become a Sherlock Holmes. In your mind, always believe that there may be something which they have hidden and I have to uncover it. Now, when you go to fraud risk later, you will see that there's something called pressure opportunity rationalization. Now, this is something that came as a result of a report and the research work that was taken. We are going to elaborate more on this when we go to fraud risk. But typically, when you do your work, get into that hat where it says something is fishy. When the work requires you to be independent, that means when you're doing any kind of an test function, independence need not just be on paper, it has to be substantial. So when you say independent, it simply means not only you, but even your family members who are closely related to you, you cannot be doing that work. Okay, you are see, remember when we were doing the audit, so when I was a part of one of the team for Big Fours, I used to go for one set of industry. Another set of people used to go for another set of industry. Okay, so I was primarily in the FMCG sector. Now I have seen what happens in HUL, what happens in Nestle, what happens in ITC. So I know what is the best, internal control that could be there in so many other places, right? Because we are industry experts. So I always have to, so we have an understanding, which, we build up a third eye. And this may sound a little strange, but I feel once an auditor, always an auditor. Everything we start questioning, even in personal life, that boundary gets blurred. So what we're trying to say is you develop a judgment. Even if you look at something, you can start sensing what could be wrong, what could be right. So use that professional judgment when you're evaluating. So things may look very good on the surface, but because you've been in this profession for long, You have a gut feel. You call it intuition, you call it a gut feel. Use that gut feel to understand where you have to dig. So it's like saying, there is a bomb somewhere. Okay. Now, as a sniffer dog, I know where could be a, no, I can sniff things in the environment because that is the skill that I develop and I've been doing audit for such a long time. So use your judgment. I have given you laws, rules, everything, but use your judgment with skepticism in order to come up with the audit report. Now, this is very important, star this. This is what we refer to. Guys, please keep yourself muted throughout, right? So, what is very important is yes, I need to get a lot of evidence, but please do not assume that the guy who's sitting and running a general store on the road down the corner, just because he has no internal control, his reports are wrong. Please do not assume that because you'll be surprised to know that maybe the launderer, maybe the general store guy never makes a simple mistake, even though he has no computer. He still is very adept with his mental skills, writing down, doing everything. Just because you do not have internal control or the internal controls are weak, it does not mean that the financials are wrong. It simply means that as an auditor, you've got to do much more work to come up with a conclusion. It simply means you cannot rely on the client's records to create an accurate information. You've got to do a lot more work. So poor internal control means a lot more work. It does not immediately boil down to wrong information, wrong financial results. And it is my job to do the work in compliance with GAS. Okay, now comes a huge problem because of the fact that I am a human being. I'm not a machine. I'm not an AI program. So I come up with a lot of bundles and a lot of baggage on my end. And you have to be aware that all of these baggages creep into the system. I'm giving you a very cliche kind of a example. But these are examples which you feel will creep in life. So imagine if I am biased against men. Just imagine I am a women auditor and I'm biased against men. So I go to a particular location and I feel that their head of accounts is a man and I will automatically assume everything is wrong. What will happen? I will put a bigger team. I will put more experienced people because my gut feel says that this place is messed up. Why? Because there's a man who is doing the work. Do you think that can happen in audit? Tell me honestly. Yes, no? I'm not saying it will happen, but do you think there is scope for a situation like this to happen? The answer is yes, right? Because it's people who are doing the work which is also done by people. There is a lot of bias that creeps into the audit process, and you have to be aware of these biases. In real life, we've seen things like this happening. Okay, so once I remember there was a standard which was done incorrectly in one of our clients who was in the FMCG sector. So inventory, they did something which was wrong. And what we did was, we assumed that that will be the same thing in another industry which was into chemical manufacturing. And we wasted a lot of our time digging deeper, deeper, deeper in that industry just to prove that inventory there is correctly stated. Even though inventory in a chemical industry following process costing has no link with inventory in an FMCG sector, which was like a manufacturing sector. All of these biases has a name. And as an auditor, you've got to be aware of these biases. The first bias is availability bias. What is availability bias? Whatever is available at my discretion, I give more weight to that. Look at examples. My suggestion is every time when you get lost, keep an example as a north rather than the definitions. What's the availability bias? An auditor recently found fraud at a retail client. This is what we did with the industry that I'm talking about. When we dug deeper and deeper in the chemicals industry, depending on the data from an FMCG industry. Why? Because we had the data of FMCG available and we were biased and we applied that data in the chemical industry also. See, an auditor recently found fraud at a retail client. They might then overemphasize fraud risk in their next audit, even if it's a low risk client, just because a prior experience is fresh in their mind. So it's an availability bias. I have immediately available data and I'm going to just use that data and put it in places where it may not be needed. So what we ended up doing, putting a lot of my resources in a place where it was not required. Then there's something called confirmation bias, right? I I look at one data and I keep on confirming that data in my mind. Look at this. See, an auditor believes management is honest. So I have come up with an opinion that the management is honest. Now, this is the example that I gave you about the bias that I had against men, right? So I come up with a conclusion, this team is dishonest. Why? Because there's a man at the helm of the team. The reverse can also be true, right? I automatically feel that if there's a woman who's handling the entire function, then the function is must to be good. All of these are confirmation biases. And then if that is a blinder that I've put, everything that I will do will conform to that blinder of mine, right? So what do? I feel that the management is honest. They may actively look for evidence that supports this while unconsciously dismissing red flags. So even if there is something wrong, I am so, getting into that mode of confirming that they're correct, that I'm unmindful of the red flags that are showing up. Then there's something called overconfidence. Like I know. If I know, then I know. See, an experienced partner might feel they can assess risk by gut feel. I have done work for 10 years. I know all about it. I go to a place and I sense what is wrong in that place. And then I don't need all of these softwares that you guys need today. That's an overconfidence bias. And all of these, now this might look very strange, but in reality, guys, these creep into the system. Because at the end of the day, you can't keep psychology away from people. Okay. Anchoring bias. See, an auditor anchors to the client's provided inventory number of 5 million. So a client gives me a data, balance sheet shows inventory of 5 million. So I keep that as a base. And then all my work, I'm trying to figure out whether that 5 is correct or not. Maybe that 5 should have been 7, or maybe that 5 need be 2. But in my mind, I have anchored a figure of 5 as a base. Maybe that figure is completely wrong, right? So that is an anchoring bias. Groupthink viruses, I come to a team meeting where there's my partner, there is consultant, there are staff and everybody. And my partner has a very, very dogmatic presence. And he comes up and says, I think this area is wrong. Rest, everything is correct. And even though I may be just a small intern in that place, but I took cash and I found 2 or 3 very big red flags in cash. But just because I'm sitting in a meeting where there is somebody who's at the helm of affairs and shouting at the top of his lungs that I know cash cannot be a problem. Imagine this would have happened in Satyam, right? Some poor chap must have done cash because that is the lowest thing. We feel cash can never be wrong. And that got overridden by the management and the partners because group bias got imposed on the individuals. And later on, it was found that cash was incorrect. Okay. Hindsight bias. Like, see, everybody says in the stock market, this is something which is so prevalent, Every time this has happened with me, I've always sold my stock before that big boom has happened. And I've always bought the stock at a time after which the stock went down. So when you're making that decision, you don't know whether it's the start of the curve or whether it's the end of the curve, right? And when you look back, you always say, I could have done better. But at that point of time, you don't have the data which is going to be the data which is above, right? So you cannot be hard on yourself by just looking back and saying, oh, I should have done this. No, hindsight, everything is clear, right? You look at this example. After a company suddenly goes bankrupt, an auditor might look back and think, oh, the warning signs were there. But actually, at that point of time, all of those signs that today you're calling as warning signs were something that you could have easily overwritten. So all of these biases exist. And when you're doing the audit, you have to be aware of these biases and try to override these biases. Okay, this is actually a very, very true thing, guys. I may be wrong, okay, because I'm a little biased. But when we started doing audit, I have done audit in manual systems. And in manual systems, I still remember a lot of time being spent on ledger scrutinies. We used to spend number of hours doing ledger scrutiny, and through that ledger scrutiny, we used to get a feeling of everything that has happened in the company. I still remember there was a time when I've done a related party audit of a company whose corporate headquarters was not on SAP, and all the other transactions were on SAP. When we did not have anything to latch on, we were very, very aware of the responsibility that we have. But the moment we have these automated tools doing our work, we immediately put blinders and we don't go beyond the reports that the automated systems throw at us. So automation bias, see, this example is really good. See, an auditor uses a tool that flags 15 transactions. So I put that data in a system It gives me 15 transactions. And then all my time I'm concentrating only on those 15 transactions. What if there are other red flags that the system has not been caught or not been trained to catch, right? So they may only investigate those 15 and trust the tool found everything, ignoring their own intuition to review other non-flag transactions. So now we have these sophisticated terms, but I still feel ledger scrutiny was one of the best things that we could do then, because we used to get to the nab of everything, even if there's a decimal which is coming, which should not be coming. When we dig deeper, we understand there's some error that's happening in the hindsight. Okay. So please be aware of these biases, because these biases do creep into the system. Okay. I don't think we'll have time, but I'll give you a small story. One of the books that I read was of Charlie Munger. And this guy has a very good concept. So just remind me at the end, I will give you a very nice example to tie this up. Okay, I think what we'll do is we'll finish theory today and we will do sims and practice questions tomorrow. Okay, so what is my job? Now, if I look at SAS has made it very clear to me that if I am doing the audit, as a non-issuer, I can either do the work as a non-issuer, I can either do the work only for financial statements, or if I want, I can do financial statement audit, plus I can do the review of internal controls over financial reporting. So we are using the term ICFR, internal control over financial reporting. But this is a discretion which we have put on the company, because it's a small company. I really don't mind whether you have done this and you want a formal report on this or not. But the moment I come to an issuer's report, I do want you to give me an integrated report. For a big company, I do feel that the financials are coming out of the system, and you cannot give me a report on the opinion on the financials unless and until I see your opinion on the internal controls as well. So here, two opinions are mandatory. One is the opinion on the financials, and the other is the opinion on internal controls over financial reporting. Okay. Okay, what we'll do is, guys, I will take a detour from here. Let me do the first sim with you guys, okay? I think we are in the position where we can do the first sim. Okay? The first sim, first part. I want everybody to participate. Okay? We are taking the first sim, and this is a portion that we've already discussed in today's class. Okay? There's a small part that is left behind. We'll do it tomorrow. Let's just first talk about this sim. Please write your answers in the chat panel. Okay? And your answer should be 1, and then give me all the 3 answers together with 1. Okay? The first row we'll do. So we'll do it row wise. A client, see, all of you have this interface in front of you. Garvit, you have to say something. Please keep yourself muted, okay? Because there's a background noise coming at your end. So I want you guys to do this sum with me, okay? A client, and please don't look at the solution, it will really not help you, okay? A client needs financial statements for its owners, but does not want the CPA firm to provide any assurance or to issue any report. What kind of, sorry. Oh God. Biplab could not attend today's session because, see, this is what I'm trying to say. Guys, if you have an issue with login, please let me know beforehand, because if you tell me a couple of minutes before the class, I will not look at your at your SMSs, okay, and WhatsApp messages. This guy just missed one of the most important classes in audit because he was not ready. Okay, first question. What's the answer, guys? What kind of engagement is it? Can you tell me? A client needs financials, does not need any report. What kind of work? Very good. Rashi, unmute yourself. Yes. It's a preparation. Then what standard we have to follow? Rashi, first. No, Mitali, there is no report. Can you see? If there is no report, then it's not compilation. Then it is preparation, right? So if it is preparation, remember, it's a non audit function. We have not done audit at all. So it is covered under SaaS, and we're not giving any assurance to the company. Is this clear? We are not following SaaS. We are not doing any audit, so there's no assurance. We have to follow SaaS, and this engagement is called preparation. Is this clear? Is the format of the question clear? Okay. Now let's go to the next question, okay? A client's bank requires a CPA's report that provides limited assurance on the client's quarterly financial statements. What is this? And what kind of a work is this? Very good. Which standard? Subhashi, unmute yourself. What is this? Subhashi, are you there? Unmute yourself first.
Review.
Very good. Covered under?
Quarterly finance. PCA, BOD, ICPA.
Where is it written that you are doing the audit of this company? Have they told you that you're doing also the audit of this company?
No.
So it will be a SaaS review. Is that okay?
Okay.
And what kind of an assurance is this?
Limited.
Very good. Third, a client's investors require a CPA to provide positive assurance by issuing an opinion on the annual financial statements. What is this? What is this? She can't mute.
Yes, ma'am.
Are you doing it on historical financial statements?
Yes, if it's an annual statement, it is historical. I mean, the year has already passed,
Then how
right?
can it be examination? Examination has to be on something which is not historical financial statement, isn't it?
Yes.
So it is?
Audit, okay.
Are you clear? Which will you choose amongst all the other options that are given here? Very good. If nothing is given to you, you will not choose PCAOB because they have not told you that it is a public limited company. So it is SaaS. And what kind of an assurance?
Positive assurance.
Very good. Is this clear, Mitali? Have you understood why audit and why not examination? Is that clear? Very good. Next, a client has asked the CPA firm to perform specific checks and issue a report of findings, but not to provide any assurance of any kind. What is this? Very good. Rashi, unmute. What is this? Okay.
Ma'am, agreed upon procedures.
And covered under
SSAE.
attestation standard.
And positive assurance.
No. They've already told you there's no assurance. What you get is the result of procedures.
Okay. Yes.
Yeah. Thank you. Yeah. A client needs a CPA to issue a report expressing an opinion on the effectiveness of its internal controls. What is this? Shikha, unmute. Now take this question.
Yes, ma'am.
What
This will be audit.
No. Are you examining historical financial statements?
No.
But you're giving a positive opinion, right?
Okay, so this is examination.
Very good. And you have to cover it under?
SSAE.
And what kind of assurance?
Positive.
Is this clear?
Yeah.
Very good. Last question. A client wants the CPA to assemble its financial statements and issue a report that disclaims any assurance. Mitali, your turn. Unmute yourself.
Yes.
What
This
is
is
it?
audit.
Okay, go slow. You don't have to rush. Is there any assurance?
No.
Are you in the position, are you helping the management or are you against the management?
Uh, Helping the management.
So it has to be either preparation or compilation. Is that correct?
Yes.
So what is this?
Compilation.
Why?
Because we are not making anything. We are just reviewing the statements. If
No,
it
you are
would be
not
a
reviewing. You cannot use the word review so loosely. Review is an assurance.
yes,
You are, so the only difference between preparation and
because we
compilation
are
is the
assembling.
report. Is the
Yes.
report. Are you issuing the report? The answer is
No.
yes. So it becomes, yes, you are. See,
Okay. Yes, we are issuing the report.
when you are not issuing a report, it is preparation. When you are issuing a report, it is compilation.
Yes.
Covered under
SSAR.
review standards. And is
Review.
there any assurance?
Uh, Disclaiming any insurance.
Are you giving any kind of an opinion, whether limited or positive
Yes, we are
opinion?
giving an opinion.
No.
No, we are not giving any opinion here. We are just compiling it.
Okay, go slow.
Yes, ma'am.
Preparation and compilation are the lowest level of services where you do not need to be independent. Preparation is no report. Compilation is report. Hence, if you're not independent, you need to disclose it in the report itself. Beyond that is review. After review is your examination. After examination is audit. The difference between examination and audit is for historical financial statements. Examination is for anything other than historical financial statements. But even that is a review.
Okay.
Is that okay?
Yes.
Yeah. Everybody, is this clear? Yes, very good. So what we've done today, one second. I think we are left with the audit process and the assertions. Okay. This we are going to do tomorrow. Okay. I'm going to go a little slow here because I don't want to rush through this. And this is a very, very important topic. Okay. Mitali, yes. What is your question?
Okay, ma'am. After this class, what I supposed to do? Should
Yeah,
I
yeah, I'll
go
tell you.
to?
Wait. I'll tell you what you're supposed that is what I will be referring to right now. Just uh one second. Yeah, just hang on. I'll let you know. After today's class, I don't want you guys to do anything. Just go to the PPT once. People who are following Becker, I'm not too sure of miles. Mitali, you have to give me a detailed breakup of miles. Otherwise, I'll not be able to cross-reference it for you guys. Okay. So please give me the cross-reference for miles.
Sure.
My suggestion is don't do anything. Just follow today's class. If possible, the first sim, and in fact, both the practice sims you guys can do on your own now, frankly. There are two practice sims. The idea is to give you a scenario to test yourselves. This is the central thought that is going to be tested there. In my opinion, you guys, I don't want you to do any MCQ right now. Tomorrow we're going to wrap this session. That is the time and I want you to go and do an MCQ. But right now, don't do anything. Just practice two more sims that has been given to you on the Pixalearn LMS. That's it. Okay. People who are following UWorld, I would not want you to do any MCQ right now because you know what UWorld has done? They have followed the AICPA blueprint totally and they have given you a lot of questions on government audits, ERISA audits, a lot of questions on attestation, compilation, review. So the first part, I don't want you to do those questions today. It will freak you out. We will start with UWorld questions from our sessions day after tomorrow. Quality control standard and pre-engagement. Those are the stuff that you will have to start with because I don't want you to feel overwhelmed when you start doing the MCQs. People who've done or who are following Becker, please wait for the class tomorrow. Once we finish the class tomorrow, then you can do the first two sub-modules of Becker that I've already written as a part of your reference in the tracker. Okay. But people who are following UWorld, I don't want you to do any MCQ right now because they've just given you so many MCQs in the first two topics and they are They're overwhelming. You are going to be overwhelmed. So just wait till quality. I want you to start doing a little bit. Once you've done 3-4 modules and you get a hang of how to handle UWorld, then if you're courageous enough, I would want you to take the first 1 or 2 modules that I'll be referring to in the first and the second lecture. Not right now. Right now, I want from you is to finish the session, review the PPT once, and do the two sims that I have left for homework for you guys. Okay?